Hey, so my face looks really huge on here. I don't know if that's the way it ought to be or not. Can you can you hear my audio? Are we good there? Um, anyway, I just want to say good morning. I know it's been a little while since I've been here. I'm curious if some of you are like me. I get emails. I get a lot of them, but there are two that I open every single month, and or every single month. And one is from Zillow that sends me a home value, and another one is from HomeBot, which sends me a home value. And this past week, I got two emails, exactly the ones I just referenced, and the difference in home price that they both said my home was worth was $200,000. And I don't have a ridiculously above the average home price on my home. Not it's not for sale, but that it's not out of the realm of understanding when mine falls into a certain range that is basically just slightly above average for the area that I live in. And it's interesting to me that there's that much of a discrepancy between what major organizations are sending out to people that are interested in that kind of value. So what's the solution at that point? Because just to add on, so we have an issue. Um, and then so where do we go from there? Because you want to talk about uncertainty. It was just a few years ago where you could put almost any value on your home and try it and you would get interest. Now it's you have to be within five to $10,000 of of the actual selling price, or it may sit for months and months and months. Our average days on market everywhere except the Woodlands, which is a very unique special place, are over 100 days. So you're looking at 3+ months of it sitting on the market. If you are someone that needs to move the house quickly, you're probably thinking about it now in order to get out of the house to be somewhere else to start school, particularly if you need to sell this house to buy another one. So then, there's an issue. Like, what is my home worth? Number one. And then number two, what's going on? Because if you saw last week, the our credit rating as a country was downgraded. So bond rates jumped up, and then mortgage interest rates, which follow the 10-year Treasury, jumped up as well. So yesterday we actually hit 7% on a mortgage rate, and then it dropped down to 6.99, which is like, woo, okay. Uh, so that provides its own set of issues when it comes to values. The higher the mortgage rates are, the harder it is to afford a higher price, which then feeds back to, if you overprice the home, then you're going to take a certain category of buyer out of the equation because they just can't afford it. Meanwhile, the confusion continues when you hear about the legislature continuing to push lower taxes and continuing to push elevating the homestead exemption, a lot of different things with regard to property taxes where they're trying to reduce them. However, most of you, like me, probably just got something from the appraisal district that said your home value had gone way up. So then you owe so much more. So any tax reduction that we're getting is being offset by a value increase that is set by the very government that gave us a tax break. So it becomes, how do we understand this? How are we supposed to deal with this? It doesn't feel like we got a tax break, even if you're over 65 and your taxes are frozen at a certain rate. Watch that value because it's continuing to move up. So it doesn't affect you directly. But when you go to sell the home, the value on the tax rolls is going to be significantly higher. It then defaults to whatever value that they put on it. So our credit rating gets down, mortgage rates go up, taxes are going up, or tax values are going up, and then you've got insurance. Who has had an insurance increase over the course of the last year? So when you start adding all of these things together, hopefully in your mind it feeds back to how important pricing is and how important it is at this point to have someone that can look at kind of the whole picture of what you're doing. Look at the whole picture and say, okay, here's your mortgage rate right now. Here's your insurance right now. Here's where your taxes are right now. In order for you to get out of this home, some of us have to, others of us don't, which is called the lock-in effect, because there are plenty of us that are even under 3% on a mortgage rate, which are like, nope, I'm good. I can stay here forever. Others are being transferred, being relocated, getting a job elsewhere, families are growing, divorces are happening, people are still passing away, believe it or not, and it's having to cause sales. And so it's important to consult with someone that knows what they're talking about when you talk to them about what's most important to you. It's if you need to move, pricing becomes so critical. We have something we call the law of the falling knife. Now, just for context, I have reviewed over 50,000 real estate transactions, and I can tell you unequivocally some patterns that occur. If the home gets priced too high, and you start lowering the price, realtor says your price is here, you want to go, let's just set it here, and then we can negotiate if we need to. That's not realistic now, in this time, in this day and age. And now inventories are rising and demand is moving out there, but prices aren't really moving. We're seeing on average across the whole company concessions of around $5,500 on each transaction. And that's when, right now we've got a lot of issues with roofs. We've got a lot of issues with rotten wood, little things across the house that need to be fixed in order for you to satisfy financing on the buying side. And then that allows for it to go through. So it's on average about $5,500. The highest is somewhere around 20 if you can, but it's because people get to a point where they have to move. And so, and they have to move the home. So the point is you can price it up here. The falling knife starts falling when you start reducing that price, and it's been on the market long enough that at that point, people are curious what's wrong with it. And so then that's when they come in with the really low priced offers, if they give any at all, where you're trying to grab that knife as it's falling. And you end up where your price, realtor price, and then the selling price is down below that, a pretty good ways below that, and it's taken 4 months to actually get the property moved. So anyway, I haven't been on here in a while, so I just want to jump on and say hi, but right now is a weird time. You've got appraisals coming out, you've got insurance, and you've got what we in our minds perceive was the value 3 years ago of our home, which you're right, it was way high and there was a lot of demand. We do have a lot of demand right now, but pricing on the home is the most critical thing right now. So keep an eye out for that, but call your pro. Let them come look at your loan, look at your insurance. We see a lot of transactions, so we have a lot of opportunity to help you. And that's there won't be any obligation associated with that. Just start talking, and that will get you in a position to be able to do what you want to do. So listen, have a great day, and we'll talk to you soon. I don't see any rain in the forecast until like next Tuesday. So use the sunshine, heal up, take some time, look at where you are in your situation, evaluate it, and move forward. Positive, productive. Have a great one. Talk to you soon. See if I can finish this.